The Reserve Bank kept their cash rate on hold today, but suggested interest rates may rise earlier than previously suggested. Business reporter Ed Boyd has been across this for us. Ed, the cash rate may rise in 2023. That's a year earlier than previously suggested.
Yeah, Kieran, the big question coming out of today's Reserve Bank board meeting was how would they respond to inflation getting back to within their target range between 2.1%. They want it between 2% and 3%. It's now done that. What were they going to do? How were they going to respond? Well, they kept the cash rate on hold, but they did change their language. And it's quite a significant change from the Governor, Philip Lowe. Instead of saying it's unlikely we're going to see rates rise until 2024 at the earliest, they now say there's a chance we'll see the cash rate rise in 2023. And that is all due to inflation. So the Governor today spoke about petrol prices being the main contribution to why inflation has gone up this year. But he believes inflation is going to continue rising and it's going to be on a pathway to being within that 2 to 2.5% area that they want to see before they raise the cash rate. This is Philip Lowe speaking just a short time ago, talking about inflation and interest rates.
It is possible that faster than expected progress continues to be made towards achieving the inflation target. The recovery of the economy and the recent inflation data have increased the probability of this. If this faster progress were to be sustained, there would be a case to lift the cash rate before 2024.
The Governor of the RBA now. It's also the central bank upgraded its economic forecast today, Ed, including GDP growth and on inflation as well, tellingly.
Yeah, look, the big one really is GDP growth, and it is quite unusual for the Governor of the Reserve Bank to do these sorts of public press conferences. This is the first time we've heard him in all year, really. So quite significant here. But the big question is, well, what were they going to do with GDP growth? Have a look at this first slide. This is their forecast for 2022. You can see what it was. It was 4.25%. It's now been lifted to 5.5% next year. Unemployment's going to stay the same. So is wages. Inflation is going to be up as well to 2.25%. So much higher than originally anticipated. If we go to the next slide here for their forecast for December 2023, they've got GDP growth at 2.5%, unemployment staying at 4%, but wages, they're going to be increasing to 3%, which is a great sign for people in jobs. And inflation, that's going to be going up to 2.5% as well. So that is really when in 2023, it's very likely that the Reserve Bank is going to raise interest rates. And this is just a little bit as well from the Governor talking about the economy and economic growth and our GDP being roughly 5.5% next year.
At the outset of the pandemic, economic policy, including monetary policy, set out to build a bridge to the other side. The good news is that other side is now clearly in sight. As restrictions are eased, spending is picking up relatively quickly as people seek a return to a more normal way of life. The rapid increase in vaccination rates has been critical in getting us to this point. More broadly, though, the support provided by both monetary and fiscal policy means that the Australian economy is well placed to resume its expansion.
So a significant update today from the Reserve Bank. They do have one more board meeting left this year in December, and then they get the month of January off before coming back again in February 2022. Kieran?
Ed, thanks for the update. Interesting day there.